Hey guys, welcome to another Trade Genius podcast. Bob and Phil here. As always, guys, this has been all by design. What are we talking about? Well, we're going to dive into it in this video. You're not going to want to miss it. Very important for your portfolios. Let's go.
Trade Genius.
Hey guys, I'm gonna tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below, and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code podcast for 15% off the retail price of newsletter. Thanks for listening.
All right, Bob. So, we've been talking about how it's interesting how the war kicked off, and, it seems like that's by design. And we're also seeing something that also looks like it's by design. And maybe the war is tied into it because it ties back to what we're seeing in the bond market. Take us through it.
Yeah, and we have an Easter egg at the end. So just wait. We have a trade for you. Yeah, the issue we have here now is a collapse in spending, and it's starting to manifest itself in the tax receipts. And we're going to show you that first. So this is why I always kind of like cringe when they say unemployment's doing great. Well, I think in North Korea, they have 0% unemployment. Doesn't mean people are making enough money to live. And so that I always like cringe when I hear about the unemployment rate. It is irrelevant. Are people making more money than they're spending? Are people making more money than it costs to live? Are people making enough money to support the tax obligations of the federal, state, and local governments? And we're here to tell you it's absolutely not. I don't listen to unemployment rate. I hate it because you have to trade off of it because they make that an important number. But this is the important number here. Are people working and they making enough money? And the answer is no. And I think we have one more chart to show it too as well.
Yeah, so this chart here is the federal government current tax receipts. So this is just everything. So the previous one was personal income taxes. This is everything. And you guys can see that not even corporate America is saving the game here. What's interesting about this print, Bob, is that normally when we get down to this percent change, one year over year percent change is what this represents. So normally when you have this steep of a drop off in tax receipts, you're already in a recession. So we're basically seeing the same type of slowdown that we got in the great financial crisis recession and the dot-com boom recession. But again, when we're at these levels, we are already in a recession. So recessions are backward looking, meaning they'll mark it up on the chart after the fact. So they may go back in over the next quarter or two and say, yeah, we officially entered recession in Q4 of 2023. So this chart is telling you as of today that we should be in a recession. And I think most of us have seen enough slowdowns across the country. You guys have been chiming in on the comments, and Bob's in a very busy area there in Southern California, and he's seen a large drop off. When I left Hawaii, I have some friends in the rental car business. So after Labor Day, we had an influx through Labor Day, and then it just dropped completely off back to pre-COVID normal non-seasonal levels. So and that's the first time they've seen that in quite a long time. I think the big leading, I'm with you. I think unemployment numbers, everyone's so, is unemployment, is it getting worse? Is it getting better? What's the Fed going to do? I don't think any of that matters. I think tax receipts is all you need to look at. The economy is booming. These things are going straight up in the air, and it's not. It's going straight down. So then it's like, okay, what are we seeing in flows? And I think that's where this next chart, Bob, is interesting. I think it puts the nail in the coffin as far as what's going to happen here over the next couple of quarters and the recession.
Yeah, Phil, throw this chart up. This is when people are asking us all the time, when's the bond bear going to end and we're going to flip to bond bull? So Phil, a lot of people ask me and ask you, so when's this bond bear going to end and we're going to have a chance to make some money on TLT? Well, I think this is telling you right now that the powers that be have succeeded in animating people to the bond market. This is going to cause a shift out of the equity markets because we're talking trillions of dollars that have to be bought here over the next 6 to 9 months. And there's only one way you could do it. You got to get people to shake out of equities and out of money markets and into bonds. And so I think this is showing you that people now are ready to accept that. And then also then Janet Yellen has to go up the duration curve, which is she just can't print T-bills ad infinitum. It causes imbalances in the market. So she's going to be starting to layer in different bond buys, and that's going to drive those yields down, and it's going to drive TLT up, and we're going into recession. Well, we're in a recession, but one that they'll admit to, and that's going to drive more people into the bond market. Look, you're getting 5% on your money, and you don't have to risk anything. You know, I have a brother-in-law that can basically shift his entire investment portfolio over to the 90-day T-bills, and there's no way he can spend it all, you know, from the interest earned. And people are going to start seeing that, saying, why am I agonizing over a potential 20, 30, 40% drop in the stock market when I could just throw my money over into the T-bills or 2-year treasury even, and just walk away for a while, and I know I'm going to get paid. And I think a lot of people are going to be joining that chorus here over the next 6 to 9 months. Look, you get a good war going around the world, and people risk appetites collapse, and where do they run to? They run to the United States Treasury, and I think that's what's going to happen here.
Well, I would agree. And, you know, and when we talk about all by design, you wonder if they knew that, you know, eventually there was going to be something popping off with Israel and the Gaza Strip, and therefore they could go ahead and be really aggressive with debt, right? Because we've issued more debt than ever in the last year, and it's just been a big topic, right? Out of control. You can get away with that if you have massive bond demand, and I don't think you can get any stronger bond demand than not only having a recession, but also going into armed conflict. And that would take us back to, I think you will find similarities to 2001, right? Because not only did we have a recession, but we also had the 9/11 crisis. And so, you know, it's not outside the realm of fantasy that, you know, they knew something was going to come. They knew they could lean on that in terms of floating debt. So you could create a deflationary environment too, because you have $5 trillion of debt out there. What you need is to be able to buy back your bonds very cheaply. And that's another scenario that could happen too. Not that that would play out where bonds would take a dump as well anytime soon, because I think the immediate play is get through this recession. However, longer term, they always say, you know, either make your debt extremely cheap to buy back or inflate away your debt, debasing your money supply. So I do think that is the longer picture. That's going to take more time to play out over the next several years. But it's very interesting that the geopolitical thing has really helped out the Treasury. Yellen's problem that she had is now much less of a problem. And we're starting to see the institutional flows come in. We saw it on TLT, right, last week, and across other bond ETFs. We saw a lot of flows go in last week, and lo and behold, here we are. Now we have a conflict, and I just think the timing is very suspicious. All right, guys, well, let us know what you think. We see all these things coming together, lining up. You guys think it was by design? Let us know your thoughts below. As always, please hit like and subscribe and smash that notification bell if you can set it to all. That really helps us out. Also, check out our specials and our newsletter over at tradegenius.co. We also have our Fed liquidity template, which we think will be very important going forward over the next several weeks. Thanks, guys. We'll see you on the next video. Take care.
Trade Genius.